Right. Let's talk some equities. Right. So I don't remember the last video I recorded, but let's actually check that out. Let's check that out. It's been about a week, right, and some change. So what's happened since then, right? We had this big breakdown on the 29th. I forgot what that was, but we had a very notably weak weekly closure, right? Failing the highs. And when you look at the weekly chart, right, you can kind of see just the distributive look that we're developing and the lack of like accumulation within this range. But there wasn't really anything crystal clear quite yet in terms of like, okay, we're seeing the leg in October and in November, and then the exhaustion as we break out to new highs until this week, right? We obviously had the breakdown, the fill of this gap, the wick, and the continuation into what was a lower high to begin this week, and then the breakdown further below this gap, right? Kind of like a path of least resistance through this bull gap that we had put in on the 22nd. And now we're going to develop, ideally, as long as this doesn't get anything significant on the Friday candle closure, a notable weekly candle that's telling us and giving us more of a signal in terms of the short-term opportunity short side, right? So we are coming into a window of vulnerability for the long exposure in terms of anti-charm flows, and it's really going to be dependent on how this range develops. But what I will say is this is very clearly a distribution. The path of least resistance through 653 is being built, and in the ideal world, you don't really necessarily want to time the UTAD. This obviously gives us a very like kind of crystal clear picture in terms of the high stalling and the legs that develop subsequently after. But I would like to see an opportunity develop that's more optimal risk to reward wise in terms of a test or an LPSY, right? I originally thought we would develop a test in here. That didn't happen. We break out and we see the selling pressure begin to develop as we push that 698 spot. So in an ideal world, right, we can maybe fill this gap and get a pop to 685 and then break down, fill this gap, and this is kind of going to be our test and our LPSY here and our path of least resistance. And all of that can hopefully happen the week of like following VIX expiration, which is going to be on the 18th, I think, and then OPEX, which is going to be on the 20th, right? So if this can kind of develop something that is optimal and more aggressively kind of showing that lack of demand and that increased supply into a window of vulnerability, very similar to last Q1 distribution that we saw build out. And if it can align with some Mag 7 earnings, like the NVDA report is going to be on the 25th, that's going to be the week after the Vantage harm flows, disappear from the broader equity market. This is building out a very distributive range. I wouldn't mind a push to break above the highs that we had put in October, but these are pretty aggressive in terms of like there's a lot of volume backing this candle and a subsequent leg that developed after that. I would not mind that. I would also not mind a little pop and reversion into a $200 pop and push into this gap fill from the week of the 10th and taking out this earnings candle high for what would be an LPSY, right? So that's something that I'm going to very, very importantly pay attention to. I think this is a very clear distribution and honestly a very clear path of least resistance developing through 171 that can kind of be played similar to this ranges, right? But this is very notable and this is a big name and I think the report is ideally going to catalyze it, right? But then we have a name like Microsoft, right, where this is kind of looking like Google last Q1, Q2. We have a double top put in. We have some breakdown occur underneath the 2024 highs, but we don't necessarily we begin to develop like these kind of climaxes, and at some point the supply is going to be exhausted, and we're already seeing that following this report with a significant amount of volume in January into the May 12th or May 1st earnings gap, and that supply is going to exhaust itself, right? Those sellers are going to exhaust themselves, and at some point the demand is going to outweigh that supply, and it's going to be more or less a bidder bidding this earnings gap where there's a significant amount of progress made, and we're already kind of seeing that in this range develop. And I think you're going to see an opportunity on Microsoft to get some long exposure, whether it be to this gap fill, whether it be back to 500. So that's something I'm going to watch. Like I said, even when we look at QQQ, right, this is a potential path to least resistance through 589 developing. But we're seeing an aggressive breakdown, and this candle closure in today's session is going to be very telling, right? We didn't get a true UTAD. We do see the breakdown, but we didn't get a true UTAD. We see a lot of volume on yesterday's candle in this gap fill, and it's going to be quite interesting, right? This is going to be a very telling weekly sequence, but a true UTAD would not be something that I'm opposed to. I think it's just a little speculative. Maybe some continuation lower into the expiration, and then we can get an LPSY and a path of least resistance established. I think it's a matter of timing. I think it's a matter of semiconductors. This is an aggressive leg off the all-time high failure off of semiconductors. This is also a lot of volume coming in on the 4th, right? So it's still a little speculative. The meta chart, absolutely phenomenal, right? This is a beautiful look. I really wish I would have bought some METU off of 592 and rallied this to 750. I mean, because it baited after hours on the report. Absolutely beautiful look, right? Or not 592, 638, right? This gap, this level, right? 639. Beautiful, beautiful chart, right? We have the distribution that I've discussed developing itself since 2025 Q1. We have the reversion and to the mean into this gap, the dark pool, the earnings report, the breakdown, the full peg being filled, the reclaim, and ideally an LPSY kind of off of this sign of weakness that was this previous floor of accumulation from the July earnings gap from 2025, right? That we broke down and now we can establish as a resistance. So beautiful look here, and this is a short I'd look for 613 to 630. Like I said, it's going to be a little speculative, and I really think you want to focus on like a few specific names, right? Instead of kind of having a wide variety, narrow it down to a really tight basket of names, and then execute from there. This was a phenomenal, like along within a higher time frame distribution. Um, Google's kind of and Amazon, like none of these are really appealing. AMD is very distributive after this big gap up that had a significant amount of volume behind it and a very ugly closure. Apple, I think this is probably an LPSY on Apple. I still think this is a higher time frame distribution, but I think this is more than likely the way this December candle looks, and then the breakdown, and we take out these lows, and then we see this kind of pop into this subsequent stall that's developing. I think this is more than likely an LPSY. There's a significant notable behavior from a seller at 277. The breakout's very exhaustive. There's a lot of volume back in the September OPEX. So this is a distribution I think is developing. I wouldn't really touch it personally. I would kind of wait. Tesla's very distributive, but we are filling this in-wog here, and we have this gap left above that never really saw a pop into it. And we're kind of, again, very similar to like a Microsoft. We're seeing these climaxes kind of build out. That makes me think that there's going to be a push on like Microsoft and Tesla, right? When we're going to see, everybody's very bearish right now, right? I mean, Bitcoin's down to $67,000, below 2025 lows, and everybody's really bearish. And it's one of those things where I feel like a lot of these guys that are now flipping these late bears are going to get trapped, and the real push is going to happen sometime post February expiration, post NVDA report. So I don't think, I think these people are going to get significantly trapped by a potential, like lower high being put in on SPY and whatnot, and the NVIDIA report at 200, right? So I think it's, because a lot of people are getting bearish just with Bitcoin. I mean, a lot of people just like pay attention to Bitcoin and the risk on equities, and they're kind of seeing that this is bleeding, and this is down 13% already in this month, and we're below 2025 lows. But then again, it's like, okay, this is a significant amount of volume. We already didn't even talk about this, right? We had just such a beautiful look on silver, man, and I was waiting to trade this as well via ZSL, and I didn't execute. I didn't pull the trigger. But we had this very parabolic top, sweep of the gap, lack of, the volume divergence, the subsequent gap up and the lower high into 23% or 29% session decline on the 30th, about 32% of the lows, filling most of these gaps, a little divergent pop into these lows being taken out in today's session that is kind of accumulated. Like, I wouldn't short this again. But then you look at ZSL, right? We had the highest volume ever by a significant amount on the 26th. We take those lows out. We barely pin it above that low by 1 cent on Thursday, and then just from close to high day, 77% return on the ultra short silver. And that was really what I wanted to trade. I didn't pull the trigger because it was a little speculative. Silver futures was not like the cleanest look on this candle, but hindsight's 2020, right? But it's one of those things. Everybody was bowled up on silver, and they're getting trapped, and then we have this massive selling occur, right? These kind of late bears developing fear, and they're selling their positions, and we get this massive decline. It starts this kind of ball effect, right? It subsequently results in a massive quick decline. It's an asset that people really kind of park their money into and have this ideology that, obviously it's a risk on asset, but, that it's always going to go up. I don't know. It's very weird that, like, gold and silver bears or bulls that are really, like, confident in this. I respect it, but it's one of those things I feel like these people are a little bit too aggressive, and it's nice. There's good opportunities on it, but when it's rallying so hard, people get very bullish on it in terms of a risk-off asset, especially when the crypto decline is occurring. And then they're going to get trapped and wiped, and we have the stair step up, elevator down kind of move. So there's that. Path broke structure. Don't really like this quite much anymore. MSTR, I actually did think this would kind of develop something off of this 155 spot with this candle, but just absolutely shredded. And it's still one of those things that I do think that there is something that's going to kind of revert these crypto names, at least a little bit. Maybe I'm completely wrong. I don't have any money on it. The energy sector, absolutely it's kind of running right now, right? Look at Zom breaking out of this, massive base that we developed. I still like Oxy as my favorite vehicle, commons wise. Disney gapped down off the report, significant amount of volume. I love this chart, this $100 range to the 126 spot, beautiful. But like I said, this is kind of when you can take your first ad on like a test or LPS, and then leave a little bit of room for the sub $100 range. Forward earnings report this week. 4 inside bars inside this 6.5% candles closure from the week of the 5th of January. Beautiful look. I think this pushes 15, maybe even a little bit higher. UNH gapped down off the report right now. I think personally, based off this behavior, this heads for a third lower low at 230, right? I think there's multiple trades that you can take on this. I think there's a long-term buy that you can have looking for 480 to 500. I think there's short-term opportunities you could have taken throughout Q3, push this to 335 to 380. I think there's going to be another opportunity to add in or re-trade both of those at a 230 pop, right? We have a significant amount of volume here, but there's nothing. I wanted the 300 range and the sweep of this Buffett August 15th gap, but we don't really see a significant buyer here. We see a weak bid that's kind of distributive into the reports. I think another low taken out for the final confirmation of a 3 lower low accumulation within this COVID gap beneath 230 is going to be the kind of picture perfect opportunity to continue to look for the $500 push on UNH. I still like Nike, sue me, but I think this is our Nike test. I think this is a Nike higher low. I like Nike commons. I still do. I still like the shorts here, but there's just not really much that's super appealing, AVGO filling the gap. This isn't really a short focus anymore. I think this will revert a little bit. I think NVDA personally catalyzes a little bit of a move higher on some of these names, whether it be to an LPSY or a QQQ UTAD. We'll have to see. This made a big pop. I don't really consider this a good long anymore. Snap earnings report. I actually thought this would develop a string, but this just bled through $7. I think these are new lows. Yeah, I have confidence in the snap chart developing something like a preliminary support, sell climax, a really nice reaction with a significant amount of volume. It's just a speculative name, very similar to like a path. Like you have to wait for the opportunity to develop itself. Hood and Palantir have been getting absolutely shredded, and no wonder why, right? These are very distributive names that have run thousands of percent from their 2021 and 2 and 3 lows, right? From $5 to 120, 200, whatever you want to say. Like, yeah, it's no surprise that these are kind of developing these massive legs lower, but I never really saw a crystal clear opportunity to develop a position on that. Um, I do have some speculations when it comes to the software names, right? I said I liked CRM. It obviously has significantly broken under where a potential spring could be. There's a lot of volume backing yesterday's print, similar to Adobe. There's a lot of volume backing these. These are like I've discussed the accumulative structure behind the Adobe and the CRM charts, and then just look at the IGV software sector. Obviously, this has bled a little bit deeper than like discount from the April lows to the September highs. But this is a significant amount of volume on yesterday's print, the highest ever. And I mean, these just some of these names just look kind of appealing. I don't think it's anything that I'm going to be super, super big on, but some of these names are beginning to develop kind of an appealing look. Very aggressive, one-sided breakdowns that kind of give you that capitulatory look where there's a lot of selling pressure that's being bid lower and lower, and then we're going to see a reversion to the mean. So these are things that I would keep my eye on, not necessarily position myself aggressively, but I don't know. So yeah, my favorite charts right now are probably Meta short, looking for this low 600 range. Oh, the BABA long. We're bleeding into this January 12th in log with a report coming in a couple weeks. I do still like this. This is a simple support resistance flip into a progression gap that you can really easily take a BABX trade. I mean, if you bid this here, right, you can bid this for 8% risk, 30% return on just a simple break of structure. If you want to trade it to the full external structure, break of structure, 44%, right? So I like this with a pretty notable risk. You're already kind of seeing a buyer throughout this gap. I do like how this chart looks. You see a nice leg, you see the exhaustion kind of develop, and then you see the breakdown into the gap where we saw a 10% candle. A little speculative, yeah. Kind of this capitulatory print from the 10th being used as resistance or support now. The report in a couple weeks, a little bit fearful on that. I don't know. I do want to build out a position via BABX. A little bit of a speculative name here, but a pretty objective risk to reward with the risk being the 150 gap loss. So that's something I'll keep an eye out on. But it's pretty much it.